Good afternoon. It's another week and another Profit Master um, tip. Boy, I am so sorry. It's been a long day. I just spent 3 hours in a course on the employee retention credit, and it is bigger and more confusing and crazier than I really thought about. Like I said, my name is Wayne Belisle before I get started, and I'm sorry, this is another Profit Maximizer moment because I went live before my brain was engaged. We are crazy right now. Let's be frank about it. CPA firms and tax preparers around the country are just going bonkers. Things are changing so dramatically, and that is one of the problems. The employee retention credit is a huge windfall for businesses that may qualify, all right? But the Employee Retention Credit, I'm going to stop saying that, ERC stands for Employee Retention Credit, is receiving very little attention in the media. It's been very little attention with professionals. And many companies are missing out on this because their tax advisors, payroll processors, and bookkeepers aren't talking to each other or don't know about it. All right. And on top of that, it's hugely confusing to most people with luckily a ton of planning opportunities when coordinated with the PPP forgiveness process. All right. I'm not going to take a 3 hour course and compress it into a 10-15 minute item. My goal with this Facebook Live is to get you to understand it's there, all right, so that you can really go after it. Why is this such a big deal? Well, mainly because of the Consolidation Appropriations Act of 2021, which was the one signed in December. The one signed December 27th, anyways. Millions of small business owners now qualify for the employee retention credit thanks to three big changes. First, you can now obtain both the ERC and the PPP loan at the same time, but you can't cover the same wages. And that's where a ton of planning opportunities come in. In the past, I've said when you're filing your forgiveness application, you want to use, the easiest thing to do is to do the simple, and especially if you're under 50 question. Well, that's probably not true anymore. Okay. Now you want to take, as if you qualify for the employee retention credit, the ERC, want to do your forgiveness application a different way. You want to use as few wages as possible because you can't use the wages in both places. This new rule is retroactive to 2020. So I'm doing tax returns. I'm going to have to see, as I'm doing each one, whether they would have qualified for the ERC in 2020. In the past, if you had a PPP, you couldn't do it. Now you can do both, you just can't use the wages. And the new law expands it into 2021. All right, that plan, and truthfully, I'm not going to confuse, let's skip that part. Thanks to the new law, the American Rescue Plan Act of 2021, the one that just passed recently, that sent the $1,400 rebate credits, it's now for the whole year of 2021. Okay, that's pretty cool. And what I mean by that is I did a calculation on one right now. It's going to mean about $90,000. Now, what this does is you have to have employees. You have to have, you need to have a drop in business. We're going to go through that in a minute. Planning note, by the way, if you are a S Corp partnership, a C Corp, the owner and their spouse can be covered. There's some confusion on that, but all the code law says as of now, unless they change it, the owner and the spouse are covered, but anybody related to them is not. So your children, your brothers and sisters, your nephews and nieces, your sister-in-law, your daughter-in-law, son-in-law, if they're on the payroll, they don't qualify for this, okay? One huge downside, and I think I've already said this, is the complexity. This thing is going to take some time, and I think a lot of the problems. Now, here's another thing that comes out too. It can mean huge dollars, but you might need to wait until you do your PPP forgiveness if you got the second round so that you can figure out which wages you used where. All right. So first, how do you qualify? All right. If you qualify, to qualify, you need what's your eligibility, all right? First, you have to determine if you are eligible, so there's really two tests. you were suspended operations, either in whole or in part, and usually that means in part at least 10% of your business was suspended. That's kind of a rough, broad. This is a facts and circumstances situation, so it's based on everybody's a little bit different. Or your gross receipts test, okay? So the gross receipts test is, and I just turned 2 pages at once, the business as an essential business whose operations continued under the government orders does not meet the suspended operations test. But if you're in business and let's say one of your suppliers, one of your main suppliers was suspended, you probably can qualify. Again, like I said, this is very complicated. If you're in that situation, get help. All right, because this is much more complicated than people are making it, the ones that do know it. And there's a lot of oddball. But the second one is the gross receipts test. Now, in 2020, I had to have a drop of 50% versus the same quarter in 2020 versus the same quarter in 2019. Excuse me, allergies, man. So that was 50%. So in 2021, that dropped to 20%. So in 2021, the nice thing about it too is that I can look at the prior quarters. So for example, for the first quarter, if I was 20% down in the fourth quarter of 2020 versus the fourth quarter in 2019, or the first quarter of 2021, here's a catch, versus the same first quarter of 2019. They let you use 2019 because in 2020 they were assuming you probably went down because of COVID. So you get to compare, did you come back versus a good year, 2019, all right? If you weren't in business as of February 15, 2020, and you started your business after that, you really need to look up the rules. There's a big windfall for those people who actually can qualify without even needing these two problems. Now you gotta have payroll, but you don't have to worry about being closed down for any substantial amount of time or having a 20% drop. The decline in gross receipts doesn't have a COVID-19 related to it to qualify. It doesn't need to be because of COVID-19. This actually creates an interesting process. I have a contractor that's probably going to qualify in the first quarter because they lost a big contract because of a change in administration, and they haven't had time to actually, in the first quarter, they didn't have time to replace it. So I'm going to have a 20% drop in the first quarter, most likely, okay? But my problem is, for the year, I'm probably going to be up. I could be up, and most likely will be, have an increase over 2020. Does it matter? No, because it's by quarter. And the nice thing is, for the first quarter, if I was down in the prior year of that quarter, I worked. 2020, totally different rules. I'm not going to get into those because those confuse you. But if you had a 50% drop or were closed by the government, and there's a website you can go to for that. If you're not sure, shoot me an email, and I'll send you the link to that where you can see. If you were forced to close, you probably can go back and look and see if you had a 50% drop or were closed, whether you can qualify and file amended 941s. All the employee retention credits are taking on an original 941 or an amended 941, okay? Qualified wages, that's before I move on. So once you figure out you're 20% down in 2021 or 50% down in 2020, versus 19. Both of them are versus 19, the same quarter. What do? Well, your biggest problem is, like I said, is communication between your CPA, your tax advisor, your payroll people, and your bookkeepers. They all need to talk to each other, and that's not often the case. So I guess I would call your CPA first and make sure they know that you've been down 50% and you just saw this video. Share this video with them. There's some good information out there. If they're confused, have them call me. I'll hook them up with that source. You can call me and I'll help you. I'm not going to be... Now, here's the problem. I really can't do much until after the first quarter, after the payroll tax deadline. But while I'm doing tax returns, I'm accumulating who I see that probably I can help. And I'm going to have to sit down and look at every single one of my business clients and actually analyze whether I can get them some money back. And it can be some huge dollars, like I said. You know, one where it's going to be 85, 90,000. I think I got that one I'm talking about, contractor. I think it's going to be substantially over that. Why? Because the amount of the credit is 70% of the wages up to $10,000 per quarter you qualify for. So if I were to give you an example, I have somebody, let's say I have myself, let's say I made $30,000 this quarter. I have an employee that made $11,500, another made $12,000, another made $15,000. Well, the thing is, it's $10,000 per employee. And let's say none of them are related to me. They're not my spouse, they're not my kids, they're not my, nothing. So I have 4 people that had more than $10,000. So it's 4 times 10 is $40,000. All right. If I take 70% of that, the credit amount ends up being $28,000. That's just for somebody with 4 employees. So if I'm down 20% versus the same quarter in 2019, with my example, that's $28,000 that they can get off, and it's refundable. Now, how do you claim the credit? First of all, let's back up. I just made that real simple, but it isn't. Okay. Secondly, is there's no backup that needs to be sent with the IRS with the 941. But the IRS has 3 years to come back and audit a 941. 3 years from the April 15th following the year. So, for example, for 2021, the clock doesn't start until April 15th of 2022, and then they have 23, 24, 25. All right. The law specifically said in the second law that added the third and fourth quarter extended that from 3 years to 5 years for those 2 quarters, for the last 2 quarters. So, and why'd they do that? Because they anticipate wanting to audit it. Now, I don't have to turn in any paperwork, so you need to have, if you're going to claim this credit, your CPA and your bookkeeper and your tax advisor need to work with you to make sure you have the backup and that you keep it. I usually tell people they don't have to keep payroll records long, but I'd say if you took the employee retention credit, you need to take it a lot longer than normal. I'd say 6, 7 years, maybe 5 years at least, but let's say 6, 7 to be on the safe side. Okay, you claim the credit on your 941 or your 941X, and it can be refunded, or to receive a refund from previously paid taxes, or you can carry it forward. All right, so you can carry it forward to offset. Let's say I have a credit in the first quarter, I can use it to offset credits. To pay my EFTPS payments, my 941 payments for the second or third quarter till I use it up, or I can just request a refund. I can also use Form 7200, brand new form, and request a refund early. And on 2021, if I know I qualify, like if I'm 20% down on the first quarter of 2021 versus the first quarter of 2019, I qualify for the second quarter. So I can actually put in a 7200 and request an advance for the full amount. That's different in 2021 than it was in 2020. All right. When you're doing the 941, make sure you do worksheet 1 to calculate what does this do to your tax return. Okay, taxable income. You can't deduct the wages that you use on the employee retention credit. Oh my gosh, that's horrible. What's the point of getting $100 and then it's going to cost me $100 in taxes? Well, that's not how it works. I'm going to get $100 in cash in my hand, and if I'm in a C Corp, I'm in a 21% bracket, I'm going to pay back 21 cents. If I'm an individual, I'm going to pay maybe 25 to 35% back. I'll make that trade all day. You give me $1, I'll give you back a quarter. I'll do that all day. All right. Now that adds some confusion to us. So, that's just one of those things that happens. So the $28,000, if I'm in a 30% tax bracket, is really only worth $19,600 because I had to pay back 30%. Am I going to sneeze at that? I mean, I'm going to come out $19,600 ahead in my example of just 4 employees. Of course not. I'll do that all day, like I said. Here's more good news. If you are over the taxable income threshold for the Section 199A, I printed this really weird, so let me see it. deductions. You don't reduce your Section 199 in wages by the non-deductible wage amount. That's kind of cool. Then 199A is the 20% of your pass-through income, Schedule C, partnership, or S corps that are not taxed. If you're over the threshold, you got an alternative way of calculating it, and this means the wages don't apply to that. So what's the takeaways here? Let me summarize, all right? After the changes to the ERC from the two tax acts, millions of small business owners like you can qualify for this tax credit for possibly 2020 and 2021, both, all right? You claim your ERC for each quarter by following the 5 steps, the steps I explained above. So, which are: determine whether your business meets either the suspended operations test or the decline in gross receipts test, calculate your total qualified wages, calculate your ERC using the rate applicable for that quarter. All right. Now, last year it was just 70% of the first 10,000 for the year. 2021, it's 70% of the first 10,000 per quarter. I can literally, if I qualified for all 4 quarters, I can literally have for one employee 4 times 7, $28,000 back. All right, it's refundable. Reduce your deductible wage expense. Receive your credit by either getting an advance payment or claiming a refund when you file your Form 941 quarterly payroll tax return, or having it carried over to the following quarter. And 5, reduce your deductible wage expense on your income tax return. So make sure you're dealing with somebody that knows what they're doing. Main thing, don't let this pass you by. Check the numbers. I'm going to be calling all my clients probably after tax season. I anticipate what I thought was going to be a mild summer is going to be a very busy summer, because I'm going to be busy getting my clients' money back. All right? And you guys, check your numbers. All right? Hey, until next time, this is Wayne Belial saying let's make this our most profitable year ever. Thank you very much.